All right, Matthew, we're back with the AI Capex playing the downside. Market goes up every day, so we're just waiting around for a little bit of turn. And I'm glad, I'm glad as we're thinking about this, I'm glad that we're able to do this because it's really hard to keep buying puts and buying puts and buying puts.
Oh,
And it's like, I want to be there when it turns, but I like the idea of having something watch it while it's moving and then eventually find some turn, whether it's 20% higher or whatever. At least we're there waiting. So,
well,
so
sometimes the cost outweighs
yeah.
by buying puts, you want to be able to maybe, hey, wait around, just say, let's get to this now at this point, right? Like,
That's right. I think the market is tired of buying puts, frankly. I mean,
yeah,
everything just goes up every day and or it'll come down 5%, which is never enough for options, especially with the volatility so high, and then it just takes off.
well,
So
that's
yeah,
just
this
something in
is
itself too.
perfect. This is perfect for the idea where we can be long in our portfolios, buying some of these things, and then in the background, we know that we got something there ready to catch and bring in some money on the downside while we start managing the portfolio.
Well, yeah, and just being tired of buying puts, right? That literally says something itself for the market. At some
Oh
point,
yeah, 100%. So
the
what did you
cracks are
find?
there.
What did you find? We were doing AI CapEx. We're doing the value chain. We
Yep.
can do the hyperscalers. I mean, they're obviously the big part. They're spending all the money. But then down below, you have, everything. Even Dell's up today. They're one of those things. I mean, everything is climbing. And tell us what you found.
Yeah, and that makes sense too, right? Like even Dell, right? Hardware, databases, all of this is it's all intensive for the AI, but at some point, right, resources run out, and that's what we're talking about. So there's going to be volatility. That's plain and simple. I mean, this could be a 5-year story, but there's going to be big downturns as well, and there's ways that we can capture this. We do have a couple different ways that I found, and for me, I think that the simple solution with what we have within Option Circle here is we can look at like a simple moving average type of crossover, and we can do it usually like an hourly, right? Like an hourly chart. We can look at a couple different ways to look at it. And you can see here, this is just very simple. 7 crosses over the 200. We have a lot of these names in here. I didn't put them all in, but I've went through a lot of them. And on various time frames, you can see the 7 crossover the 200. You got good return kind of levels here. You got good average returns on this. Anything from daily to 30-minute. And I just wanted to put like a diverse group, right? We got an iron in there. We got AMD. We got Meta. We got BTU even for the rare earths. I even threw in there just to kind of check it out. We got LUMN. We got GEV again for energy. So that we got just different ways to kind of look at this. And I've been looking at it in various factors throughout all the different hyperscalers and AI centric names here. And they all do pretty decent on a lot of these time frames. So thinking about this, like maybe we want to catch this, we can do it either on the 7 by 200 or we can do it on like a 7 by 50 as well. So we can kind of take this just quickly and run it as well. Let's see, what do we kind of like better here? This one's got a little bit less risk reward, but you're not going to wait around as much. You're going to get a little bit more trades on this. And you can see here, actually, even you got a little bit more 60s and 30s up here in some of these names. So, we can look at like maybe a 60-minute on this, and let's do like the 7 crossover the 50 on that bearish signal, and then that way we can get in early enough, right? So if we do get a big move, that's going to be something we're going to want to be in and want that trend to follow lower. And it's probably going to be volatile, and it's probably going to follow, that 50, moving average on that hourly a little bit lower. So what we can do is we're doing this on 7,000 candles, right? Like, so for
Okay.
some of these, it's pretty extensive on the daily, but when you're looking at it like on the 60-minute or the 30-minute, that's not as bad, right? But it does give you years of data of how this works. And you can see here, like on this Lumen here, 72 positions over the time, 53 wins. Max drawdown, you're still going to have minus 54.8%. That means, hey, that thing rallied back in your face kind of. But the average return, these are the ones that I'm really trying to look at here. Because this isn't our system. We don't know exactly how they're calculating all these data points here, but the average return here, that's fairly simple. That should be working fine. Average return is 4.38%. Risk reward. So I mean, for every dollar that you're risking, you're trying to get a reward of 2.1. That's what it's averaging. And then So these are the areas, and then the return standard deviation, right? Like so, like this right here is another big one that I would kind of look at. And return standard deviation just tells us how really volatile that is, right? Like so, the tighter the lower the standard deviation, the tighter it is, the bigger the standard deviation, the more volatile your returns are going to be in that kind of name. All right, so if we want to build this quickly, let's just pull up the options circle page here, and we can build this quick. I mean, this
Yeah,
really shouldn't
definitely.
take too long. So you have a focus list. I'm assuming you've already built that. So I think we'll just be able to go right into the strategies. Is that correct?
Yep.
All right. Create new. And we'll just go in and create the agent. Go in here. This is simple enough. Equity, equity type for everyone that hasn't seen this before. You go to your focus list. We already have a predefined list. And we just go in here and we can go to the custom watch list. And then we can search for it right here. So,
I have it on mine, but I don't know
oh,
if we have it on there. So why don't we leave it out?
yeah,
We'll build it
we can
out.
build one.
Yeah, we'll build it out without it, but I will put one in there later today.
All right, and we'll switch that out for everyone. We'll get that focus list in there because the one thing is you can do is I think you can build a little bit more, a broader portfolio through the focus list than you can through the symbols list. But we'll do the
Oh,
symbols
right.
list for now
Okay.
for everyone.
Is it better, you think, to put in more or less, or does it matter?
It would depend on how big of a portfolio you want, how diversified you want, right?
Okay.
Like, so I think that's more the question than is it better or worse for someone. If you're looking at diversification, smooth out returns, you probably want more.
Yeah.
But if you're looking at, I want to catch the most volatile names, you might want to focus on less than and really just
I'll
kind of
tell you what,
attack
you know what's
those.
interesting? You probably, if you put the whole value chain and you start watching what gets executed, it might give you a good look at the steps at which, things are moving. It
Yep.
probably all moves together at first, but some parts of the chain might move faster than the other parts. Like there may be a signal somewhere, maybe in the semiconductors, or in like the right now like the SanDisk and Western Digi that have exploded higher, and
Yes.
who knows, But all of a sudden, just by seeing the execution, you might get a bigger picture of what's happening.
No, very true. And market cap wise too, if when you
Right,
think about it, right? Like because what ones are going to be held up a little bit more, you're probably going to see that volatility come hit on those lower liquidity, smaller cap
right.
names
The smaller
first.
cap names,
Yep.
right. Right. Okay, good. Okay, so let's see so leave that let's leave this focus list out for now and just build out um something without it. We'll just change it later.
We'll just add it. Yeah. So we'll just say uh, hyperscaler and AI list, just so we have it in there. So for the
Yeah,
demo, right? We don't even have to add any of. Oh, we do have to add one. All right. NVDA, because everybody knows them.
sure.
But this will be changed out for everybody.
Yeah,
So, all right. All right. So what we're going to want to do then is we'll actually want to add a loop here previously. So as you can see, I made a mistake. Easy to do this. Come back in, add the loop, time frame. We don't need to run. We'll run it on the 1 minute, but let's run it on the 5 minute maybe, just because we are going to go down to the hourly. That way, it's constantly checking for you. So we have this loop kind of going right away off the bat, and we'll come in here. We'll build this through the advanced script to make sure that we have it the right way. We're going to go down to moving average, and we'll see here. We got that 7, and we're going to use that 50 on this one. We could use the 200, but since these names are so extended, I just think it's best to try to get more trades in a little bit here because you're going to have that 50 come way before that 200 unit moving average on that hourly. You look at something like BE, it hasn't been near that 200 unit moving average since the spring, and
right.
that's on an hourly chart. So uh, let's just kind of do that. Crosses below the 50. We're just going to use the 60-minute here. Current period. And it's as simple as that. You got the script. We'll just change the title quick. We'll do SMA so everybody knows too. Bearish. I think something like this probably with, opening up a position too, you know, I don't know. For some reason, for me, I'm thinking somewhere between 30 and 45 days is probably a good time frame for DTE. I don't know. What about you, Felix?
Yeah, that sounds fine.
All right.
It's high volatility, so I would say, yeah, probably 30 days.
30 days? All right. We'll do that. All right. Are you thinking something like we've done previously, 25 delta, 30 delta, or maybe you think
35 $35?
35 delta, closer to that, the money? I think that gets us being in the money a little bit quicker, and especially with some of these names, and maybe you can kind of get that, because you're going to get that crossover a little bit earlier. We can get in and out a little bit easier, and hopefully we have some nice gains on that, and we're in that money pretty easy. All right. Make sure when you're doing this, if you don't want to hit the market, make sure it's always mid and ask on here, everyone. And then we're going to just set this to 0 just because we don't know what's in our list right now. And then maximum number of trades that can be created by this open position. I always just do 10 to make sure it's nice and open. We're going to restrict duplicate trades anyways. And then we'll come down here quickly and we'll set the closing one up. So we'll just simply, uh, oh, that's my bad. We're going to come down here. Another decision, right? We're going to want simply flip it. Very easy, quick. 7 crosses above the 50 on the 60-minute. So you can see here how quickly that is, even if you hit the wrong button. And something I always do, I hit save before I retitle. So now you know that, and then we're going to come down, one cancels the others in order that we like to do. You don't have to do it. You can always, single order, but I always kind of like one cancels the other. That way we get out on profits if we want, if there's something big. You're thinking probably like, hey, these are violent. If you're thinking like me, I mean, we're playing a 35 delta. I think at least probably 250, 300% is achievable on these. I mean,
Yeah,
on the max side, I
I
mean,
would
and
say
you could go
250.
more. Okay.
250, yeah, 250 is fine.
And then max loss, maybe just do the standard kind of 50%, take it off the table. Or do you want to do something less?
Yeah, that's good. 50%.
I think so. I mean, it gives you that nice 5-to-1 risk reward here. We're looking for big wins. And bid and mid. As always, I mean, forced market closure. Are you thinking, days before, weeks before,
Maybe 3 days.
3 days? Yeah, I
Is that
think
Wednesday or is that Tuesday? How do they calculate that? Is
that should
Friday one
be,
day?
yeah, yeah. So that should be Wednesday morning. It would close out.
Okay.
Which I think is fine, right? Like you're
Yeah.
going to get some of that volatility heading in the expiration week. You still got 3 days left. If you're going to see that reversion, a lot of the times it's getting closer to OPEX, right? So like if things are
Right,
going
right.
in your fashion, you know, you might kind of, at least you avoid those final 3 days. All right. So we got that. And it's as simple as that, right? Just save it. We've done this before.
Yeah. So that right there
Oh,
would take advantage of looking at all the stocks on the stock focus list.
yep. So that'll take advantage of all of them on the stock focus list. Exactly.
Interesting.
So,
So now correlation, meaning all the stocks move similar. So you have these momentum names, 120 vol, say, I mean, they're all moving kind of the same.
mhm.
If How do we protect being executed on like 10 different stocks at the same time? Because they're all trading the same and everything's turning. And is that what I think you did it before where we have like protection?
Yep. Yeah. So when we
I
come
think
in
that's a
here,
concern for people. It's like, how does the risk management of what we're doing kick in?
yeah. So, all right. So here we restrict duplicate trades in this, right? So max simultaneous trades for a single name. You can go in, you can say 10 trades if you wanted, or one trade for simultaneous trades. So we can restrict duplicates. Um,
Okay.
and then also over here, so that way, like you're not getting loaded up, right, on NVDA.
Right.
But, in here where we have this execution, max trade count, right? So this order flow, right, that we have here in the tree, you'll never have more than 10 positions open. We can limit that too. We can say, well, all right, let's just make 5 of them, and we'll have
Okay.
5. And then you can also still come over here and say, no duplicates, right? So restrict all duplicate trades when you're back into your budget area here.
Gotcha.
So that way, max simultaneous, you'll still only get one NVIDIA. But if you did this and NVIDIA triggered twice, you could end up with 2 NVIDIAs and one BE, one HUT 8, one GEV, one BE, right? So since
Okay.
we have the 5 on, right? So we would want to just set this to 1, and then if you want to go back, you can set that to 10. That way you'll have a diversified portfolio of 10, even though we have a focus list of say 50. And how it's going to
Gotcha.
do it is it's going to take the first ones that triggered, and then as you get out of the position, whether it's stopped on the technical, the signal indicator, or it's stopped on the price indicator, whether it's for the gain of 250% or the loss of minus
Right.
50%, it will replace those through the next signals.
Show us this here, this add budget and risk configuration right there. I thought that
Yep,
was pretty cool. So you can put down, so if we have the initial budget is say 25,000 and you're going to put 25,000 to the strategy
yep.
available to trade. So you're allowed to say at any one time, I don't want more than 50% on the table.
Of my budget. Yep,
Yeah.
exactly. And you can also break it down on a per trade basis. So if you
On a
put
per
like
trade, right. So that is
only 10 per,
5%.
yep.
Gotcha. Or
If you only
2,500.
put
Gotcha.
Yeah, and if you do 10%, you got 2,500. But if you do this, 5%, you got 1,250. You might miss
1250.
out on some of those bigger names, but maybe your portfolio can't take that, right? Like if you only
Right,
have a
right.
$25,000
But
portfolio,
under available to trade, you have 50% at any one time of, and then its initial budget. So that would be
yep,
12.5. But you could
yep,
have, I thought this was called net liquid, which means
yep,
as there's a couple of accounts that have done super well over the last month, right? They've doubled their account in 4 months. So now
yes.
they're available to trade for that strategy is bigger. So if you want, you could set it so that the percentages work higher as you're growing your account. The dollar amounts per trade will increase.
Exactly. And that's like I think one thing we've talked about a lot of times we're looking at allocation based on a certain dollar amount, right? Like
Yes,
not allocation based on number of contracts.
right.
So this
So
can
this is
help you
going to
kind
keep
of
you
adapt.
honest on
Yep.
each trade. There's no trade that you should love more than others. It's a
Yep.
process of a strategy over time.
Yeah, so this helps that strategy, right? Until
Right.
we start building some other things that help even more, which is something we're constantly in the works of. So
Yeah. It keeps you honest, right? It keeps you not, and it keeps you safe. I don't want
exactly,
more than this much of my $25,000 on the table at any one time.
exactly. I mean, and like it says again, if you have 25,000 or somebody that has 100,000, they might be able to take something like the Veron or GEV, right? The nuclear play, kind of the energy play on it.
Yes.
But those options are super expensive. Like, I mean, I
Yes.
was trading it at $300 and you were, if you could play
It's
a
like
5 day
$25 an
option.
option.
Yeah, I was gonna say 5 day options were still like $13 to $15.
Yeah.
And we could trade it at that point. But now it's what, $600-700? So I mean, that 5 day option is likely 30 some dollars, right?
Yeah.
That's a 5 day option. Not everybody can handle that. Somebody with a $25,000 budget, that's
Yeah,
over
exactly.
10% of their portfolio. They can't do that, right? So
Exactly.
you
I'm
have to
almost
weed those
wondering
ones
if
out.
I should take out the GEV from the focus list just because
Yeah.
it outsizes everything else and it's like we'll barely trade.
It's like Meta too, right? Meta's another
Meta's
tough
another one.
one.
Yeah, a lot of these big
Uh, you
hyperscalers, it's
know,
it's very difficult.
Netflix. It's also tough for a lot of people. It's great when they split. A lot of people can trade them, but then they let the things kind of run a lot, and
Yeah.
I know that some of the reasons they like to have higher dollar stocks, right? Like companies do because then it's just more institutions. All right, let's give it a name quick before we go. That way everybody knows what name we have on
Yeah,
here.
why don't we just do AI Capex bearish. AI
All right.
Capex bearish.
We'll set it up so that anybody can copy it. As you can see here, AI Capex bearish.
I could make a stock focus list, but anybody can make their own stock focus list and use that with the same thing. It's really just the idea, which I think people
Yeah.
get.
And we're doing these all for free so they can copy it and make it their own, make adjustments as they like. So, all right.
Perfect. Sounds good. All right, we'll see you soon.
All right. See you soon, Felix.